Alrighty, here we go. Hello guys, welcome back to another episode of Paris and Baz Cast, where we bring to you new guest speakers every week to talk about topics that impact property management, sales and finance, the three services we help our clients at Paris and Baz. Today we are joined by Michael Burgio from Novak Properties.
Hey, thanks for having me.
No worries. So having leased more than 70% or sold, I think you've leased and sold more than 70% of commercial properties at DY. These guys are definitely the kings of commercial property, I would say, in the Northern Beaches. So the topic of discussion today is commercial versus residential.
Yes.
And how the two markets, Northern Beaches and Hills District, compare with what a given level of investment, say $1 million, what would that get you in those two markets and how they compare in terms of investments. There you go, let's get this started.
Thanks so much for joining us.
No problem.
So just a bit of an introduction about yourself.
Yes, so Michael Burgio, Northern Beaches, DY. So I'm quite fortunate that I do residential and commercial. A lot of the time you would have someone speaking which one you should buy, but they only do that sector, so they're a little bit biased. A resi agent's going to say resi, commercial's going to say commercial, or they just don't fully understand both sides of the fence. So quite fortunate that I've done both and a lot of transactions in both. So I've got a good understanding of what a savvy property investor looks for in resi and what they look for in commercial, because they're buying both. I think, so doing a lot of, and that ranges from residential from our entry level, say $500,000 to whatever, 10 million, and commercial from $100,000 storage to a $17 million development site. And then within commercial, you've got multiple aspects of offices, industrial, your strata, factories, which is a big difference to your freehold, your mixed-use buildings, and your retail shops. So got a good grasp of all of it, because most commercial agents, they only, especially in the city, they're only specialising in office, and that's all they can do, or they do development. So even they're very narrow in what they're looking for, which can be a bit of a, if you're looking to buy, you're like, well, what do I buy? An office, or do I buy this? And if you speak to that agent, of course they're going to try and sell you the shit they sell.
That's right.
So even then it's a bit skewed, so it can be quite daunting. So that means I can give some pretty non-biased opinion, because I don't really mind what you buy, because I can sell you everything. So it's whatever's best for you. It gives you whatever is good.
Suit your individual needs.
So Lisa's on. Hello, Lisa.
Lisa.
Perfect. So look, talking about commercial, I think from a mum and dad investor point of view, there's always that sort of hesitation of entering that market. Let's talk about why that may be the case.
Yeah, I think it's the unknown. It's a bit of a minefield. I think we were discussing it earlier. Even just trying to get simple information like residential, let's face it, it's super transparent. If you're looking to buy, you can find out what the neighbour sold for the last 10 sales. It's all there. All the agents, even their data and information is pretty public as well. They've all got Facebook pages. So it's just the transparency on residential is huge. Commercial, as an agent, you find it hard to find out what things sold for. Ask any valuer about commercial. They hate it because there's no addresses on properties. There's no pricing on properties. There's no rental figures. And if you're a mum and dad from the outside in going, let's look at a retail shop and let's say it's empty, you go, well, what would it rent for? And you, because if you're trying to think of how they would do it for residential, go, here's a 2-bedroom apartment. I can bring up realestate.com and see 50 of them, and I know their pricing, and you can come up with a pretty good educated opinion without contacting the agent and relying on your own investigations. You jump on the commercial, you find a shop, which there can be, it may all look the same between one shop has a grease trap and exhaust, the other one doesn't, may not have the zoning. That's a minefield in itself. But then you look at the pricing and there isn't anything.
And sometimes they'll over the shop as well.
You see one that's
100%,
and you can't really it's just, there's no information and it's very hard. And then at least, so then if you're going to buy, you go, well, I'll just contact Jim who sold me this house and I'll just buy something. And it's the easy one than going down that avenue, and especially there's not many local agents to your area to do commercial. It may the agents don't even know half the time what's happening, so you may see an agent on a listing and you're like, they're from 3 hours away in the city, and you go, I'm not going to call them, they're just going to be after my money, sort of thing.
That's right.
Don't feel comfortable. I reckon that is the biggest thing, because when you break it down, like we're going through figures, rental, like just commercial in general, it's just you could say it's a superior investment strategy, depending what cycle or positioning a buyer is in their portfolio.
100%. So it is that fear of unknown, and it being too hard. So when you are trying to invest and look at it from yourself, if you don't have a buyer's agent involved, it does make it a lot easier to go with what you know, which is residential, as opposed to trying something out of your comfort zone. So I think definitely that is the key there. Now, talking about the Northern Beaches market, let's say $1 million a buyer had, what could they purchase? What sort of size? What sort of what they would get for that, and what sort of returns are we talking?
Well, first of all, as well, if someone came to me with, and this is where the non-bias comes from, and says, I got $1 million, should I buy residential or commercial? I would say to them, do you have other residential holdings? If they say no, then I'll steer them in residential. Because to buy commercial what we touched on about the vacancy, you need to have residential, especially on the Northern Beaches, is very... It's very, not idiot proof, it's just, it's equity. It's a lot of capital growth and capital appreciation, because if you look at property and residential, let's say they're both going up 10% a year, but residential is going up in capital growth, you can't spend it unless you sell it. But with commercial, you're getting the cash in your pocket, and I think we all know if you've got that extra cash in your pocket, it's very easily spent. So for that long-term strategy for building your portfolio, you need that's your foundation, good residential. And if they've got that, it helps, because then to buy commercial, you need to have the bigger deposit. And I find if you're buying is buying it vacant, but it could be empty for 6 months, so you don't want to be leveraged as hard. So $1 million resident to buy commercial, you're probably looking at your office market sector, which is similar to what you guys have here, and those rates can range, we'll talk about it before, from 4,000 to 6,000 a square metre. The Northern Beaches, our top building would be the Lifestyle building, which is behind Westfields. It basically joins. Brookvale's your economic heart of the Northern Beaches, so $6,000.
Like the Rolls Royce.
The Rolls Royce. And what do you guys have here? And what's here?
8,500 to 10,000.
Wow. So basically double.
And they sell like hotcakes, especially between the 50 to 100 square metre range.
Yes.
You can't find them. Once you get above 100 square metres, it gets a bit tricky. I think that's a sweet spot. So it's nearly double, which is can't believe.
So comparing that to here, so in this Norwest Business Park, Praveen is saying, go commercial king. Talking about Norwest Business Park, so we've got the 2 A-grade buildings, so the Nexus building and the Atlas building. And so what we're finding here is that they are ranging from 8,500 to 10,000 a square metre.
Up to 100 square metres. Once they go above 100 square metres, the pricing gets discounted.
And that's sort of what you're looking at. And what are the level of returns? Let's talk about the comparison.
So let's just use a 100 square metre office for an example. So a 100 square metre office here is going to be 10 grand a metre, say $1 million. So there's that $1 million. And you're saying the rental return would be 400 a metre?
4 to 450. Potentially.
Gross, net, plus outgoings?
That's plus outgoings, correct.
So that's about a 4.5% rental return. Which generally, one thing that tells me is a lot of owner-occupiers love the building. So they're willing to pay a premium for it. Northern Beaches, $1 million, that's going to, so this would be 100 squares, that's probably going to get you 150 square metres at six grand a metre. But your rental return would be, in that building, $550 a square metre. So you're paying 40% less per square metre.
And you're getting a higher rental
rental return. So, but there's different sectors.
So in terms of, I guess, capital appreciation, so over time, so with this particular area being the Malfa, the owners of this estate, they are spending
$3
billion of dollars to be able to upgrade
Yeah.
that, which means that from an appreciation point of view,
Yeah.
like for example, in the last 2 years, we've seen that significant jump already.
Because
So
just to say, the Norwest Business Park, I know last 4 years ago, the prices hadn't moved much.
Yeah.
They only started moving the last couple of years as well.
Yep.
So I think 5 years ago, the business park was struggling around the 4-5 grand a metre.
yeah,
So it's
so
happened
it's come up
recently as well.
that
Yeah.
much,
So,
because of the demand.
And all my stock is on the market. That's
Yeah,
another issue. There's no new
So
buildings
supply.
basically. There's one on the lake here, Esplanade,
Yep.
but they already sold off the plan about 3 years ago.
Yeah. And
that's-
then there's the bond that's
there's
coming
a bond
up.
that just released 2 weeks ago.
Yeah.
And
Yep.
they're selling off the plan, starting from about 8.5 square metre, and selling in 2 years.
And so a lot of the buyers would be people to have their own businesses. So
That's
A
right.
lot of
Yeah.
the medicals,
Yeah.
I know there's an IVF treatment room plan they got on level 1, childcare centre going,
Yeah.
and then they've got 6 floors of commercial.
wow.
Yeah, so
Yeah.
accountants, sort of service-based, medicals, that's who is coming in this
Just
area.
in this building, we've got dentists, we've got financial planners, accountants, mortgage, real estate.
Yeah.
So it's a good mix.
That's
Yeah.
that's the mix there.
I suppose because a lot of looking when coming in here, so I think our office market may be a little bit weaker because there's a lot more probably shop fronts because and that
Yeah.
retail. So
Yeah.
the dentists can be on the main road as well. We have a lot of them here, but here they're sort of put into the office building.
Yeah.
And a lot of those style of businesses they just love to own.
Yeah,
Yeah,
Without
that's right. That's right.
They want to own it.
They want to own. So
Yeah.
that's where it sort of drives up the market. But
Yeah.
that says to me as well also it's sometimes better to rent where you're going to operate your business
Yeah.
and you can get a return elsewhere.
Yeah.
So, because especially depending where you are in your portfolio, where that money could be Northern Beaches,
Yeah.
and you're getting a 6-7% rental return,
Yeah.
putting money in your pocket now, because all your appreciation comes when you sell it, and that's what you've got to look for in your assets. Don't get me wrong, capital growth, that's why I always advise residential. You need that capital growth
Yeah.
to fall back on
For
Yeah.
the equity, for the deposit, especially.
for the equity as well.
Yeah,
Mm.
yeah, 100%.
But that's what we noticed. Look, a very far few between the offices come on the market here.
And when they do, it is
They-
either like we purchased this off market
Yeah,
when we
exactly.
knew it was
Yeah.
coming on.
Especially
So
in this
it's
range, 50 to 100 square
And that's
Yeah.
another thing with commercial, which stops the mum and dads buying. A lot of deals are done off market.
that's
Yeah.
right.
Because and that's where you really need to know that agent or agents in the area, and that I reckon that's probably a big one that's going to stop because which stops a lot of mum and dads getting the opportunities. Because if you look at most commercial property owners, they own the building.
Yeah.
Now it doesn't say it's not a good public perception in most cases. Although one thing when I'm listing a lot of property when they own it, that's their fear going.
Yeah.
That people know they're selling the building, even though it could be unrelated. They're buying a bigger building. It's
Yeah.
not that their property, not that their business is struggling. A lot of deals are done off market because they don't want a signboard. Say if you're an accountant, you're selling your building because you buy another building. If you've got a for sale sign out the front, they think that accountant's shutting down.
That's right.
It's not a good look and feel. So
Yeah.
then a lot of deals are done privately or
Yeah.
off market. So your mum and dad, like, where do I even start? Half the deals aren't there because I know with a lot of the deals I do, they're not on real commercial. They're not
Yeah.
there.
Yeah, so that's where connections and sort of having that relationship
is very
with a
important.
long term. And as we were talking, like normally a person has a family doctor that they go to for 20 years, or an accountant, but that relationship for real estate agents is not there. And where if we can build that trusted advisor relationship
Yes.
with them over time, at least you can have that first-hand conversations
Yep.
when the time is right to purchase.
And now thinking like, okay, if I was a mum and dad watching, going, that's all good and all to say get connections, but where would you start? I'm thinking probably start with like your accountant or find someone who owns buildings and leverage that. Like even if you just went go to 10 accountants, you're going to find one that has a bit of commercial property, and I'm
Yeah.
sure they could point you into that direction. Like how would you do it if you needed to build that connection?
Accounting because accounting is normally the trusted advisor.
Yeah.
Or finance broker. Depends
Yeah.
you're doing your loans because you're dealing with a lot of customers.
That's right, and when you're providing your personal information
Yeah.
to that person, it makes that
It just
relationship
gives
a
them more
lot.
trust that
Yeah.
I've done it, so I can do it as well.
Yeah, so I reckon that would be the best advice for a mum and dad to sort of because a lot of real resi agents, they're
It's
agent to contact, but commercial business to business. And from a commercial agent's point of view, if that accountant calls me up and like first time, like basically hold their hand through it, step them through. Like it's even different just up into exchange. Like there are a lot of residential buyers, which comes back to why they don't buy, because it's literally on the market, then sold. There's no 5-day cooling off, 10-day cooling off. And then they're coming from this. You got to put a 0.25 down. Then when you do your strata report, you got all this time in the world, and you got all this data to do it at your own cost. And as the agents always say, I've got another buyer, so that scares them as well. So, but I think as an agent, probably if you're an accountant or their lawyer says to me, help them through, that's their first purchase, they've got some good equity to make it happen, I reckon that's where I'd go if I was
I think it's the transparency and the trust.
Yeah,
them knowing the valuable information, I think, which the mum and dads don't really know. So that scares them off a bit.
Okay, so we've established that the level of return is around would you say 5 to 6% in commercial? 5
to 6 if you're buying it tenanted. At the end of the day, if you want comfort and security, it's going to cost you. It's like you want a good chair or a bad chair. Like it's going to cost you. What I mean by that is a lot of out of 10 investors, 80% won't buy a vacant property because they're scared of it, the risk of it being empty for 6, 9, 12 months, and the risk is real. It's more of a reality. But so if you want the comfort of having somewhere paying rent from day one, you're going to be getting a 5-6% return. I've had a couple of transactions in DY in new buildings where they've bought it vacant, which comes back to a lot of equity, mostly cash purchase. They don't have the banks breathing down their neck, because the mum and dad model is, or their train thought when you're buying a property is, the mortgage is $400 a week. The rent is $350. I can afford $50, and if it's vacant, I can do it for 2 weeks. Commercial, if you said to that same buyer, can you afford this mortgage for a year, no income, pay your outgoings, they're like, no way, I'll go buy this unit.
That's right.
So, but if you can do that and you've set yourself up the foundation, then you can see 8, 9, 10% returns, which almost people wouldn't believe if they existed, but they've gone through it empty for 6, 9, 12 months, and then you're getting those returns.
Because that's the commonly asked question, the vacancy. They also ask, after 2 years, once the lease expires, how long will it take to release it? That's a very commonly asked question. How do you normally tackle that?
Yeah, so if it's if the lease, I like to say, if to train the mindset going, let's say, because if a property's if you're selling a property, if the lease is 3 years, it's either too short or it's too long, so you can never win. But when the lease is coming up, I would say, try and buy something with at least 1 year left on it. And unlike residential, you can start marketing it virtually like straight away. So I think buying something on a shorter lease is okay. You've just got to have a proactive agent. A lot of them, and it's just a lot of people are lazy. Either the owners, or it's not even the owner's fault, it's the agent's fault, really. Let's face it. If they've got a year left on it and it could take 6 to 12 months to rent it, you need to start a year before. You need to speak to that tenant and say, are you continuing? If you're umming and ahhing, well, then we're going to start talking to tenants, which on the outskirts may sound like it will piss them off, but you say it to them going, we need to know if you're extending. If not, they're going to be empty for a year. The owner wants to start now. However, and then what I find that smooths it over is you go to the existing tenant, we will give you first right. So if we have someone who's going to sign a lease after your lease, we will come to you first to see if you're willing to do it. So we'll give you first right. But we need to at least start the ball rolling with that. So that's what I'd say to, because a lot of your mum and dads go, I've only got 1 year lease, what do I do? They almost think they can't start marketing up until that year, which is probably that resi mindset, because it goes, hey, Mr. and Mrs. Landlord, your property's, the tenant's given 21-day notice, now we'll start. Like, you don't start, like most leases are 6 months. You don't go, all right, you've just moved in, but now I'm going to start marketing it for rent. And it's fun lease. So I think it's just explaining that to them, which comes back to finding that advisor to be like, it's okay to have a 1 year rent, because most people aren't looking at this property because it's got 1 year, but you buy it and we're going to start finding a tenant.
That's right.
I may already have someone, and then it brings their comfort levels, and they go, but it's going to be empty for a year. No, it'll take a year to rent, but we're starting a year in advance. So you've still got this rent.
You've got that smooth transition when the time comes to be able to get that. 100%.
And what's the vacancy? How long does it normally take in Northern Beaches, the vacancy rate at the moment?
Vacancy, let's say DY, because DY is where our office is. We've had great success where we've done 70% of the sales and leasing in DY in a tough market. We've gone through a transition where there was a lot of old buildings undeveloped, and now we've just had 3 new buildings be built. So it's gone from, say, normally we may have 5 shops on the market to like 30 new shops. And before that, our rental rates were almost 800 to 1,000 a square metre for retail. Now we're seeing that come down to 500 to 800. And a lot of people are like, oh, the market's screwed. But it's transitioning.
Yeah.
We've had old buildings run down, developed from which may have had 2 shops on a lot of land to 11 shops, 120 units. Like, let's face it, there's not businesses starting every day, so it does take time. It could almost be it'd probably be a 2-3 year cycle. So we've had 30 new shops come in. There's a couple that's been sitting for a year or 2, but now it comes out, we've been fortunate, a few of the owners with those empty shops there's no debt on it, so it's like we've got an offer maybe half what you're getting before, but just take it. Do it for 2-3 years. Get out of this cycle. We've just had in Resi. If you've had 100 units and they build 1,000 units, there's going to be a lot of supply and take longer to rent or sell them.
100%.
That's what's happened in our market. So we're going through a transition, but it's great because that drop in rental is going to revitalise. And we've had some great new businesses come in. Like we've got the Sonders. There's like a barber shop, young, like they're low 20s. They wouldn't have been able to come into DY.
That's right.
3 years ago. One, the shops were bigger. You couldn't get anything really under 200 square metres. So with all these new developments, smaller shops, better price points, new business, brought a shitload of life to the beaches. They've got music pumping, coffee in the morning at 5. They're open. Then like Bliss Bowls we recently rented out. That was a salad company. So they were mostly online doing markets because they were looking at DY. And they're like, all the shops are 200 square metres, they're big, there's nothing, like, we just need a little hole in the wall, new development, boom. They're coming in. Brew and I, you'll see it when you go there, a little cafe, 21 square metre shop, and that's just supplying like a business park. So,
what's the square metre rate starting from for the retail shops?
For rental?
Yeah.
For brand new, where with exhaust and great for food, you're probably still around 800 to 1,000.
Yeah.
Okay.
If it's more for professional, your accountant, a physio, let's say under the 100 square metre range, you're probably 550 to 650.
Yeah.
So that just shows if you're looking to buy, there is a huge upshot in getting something with an exhaust fan and grease trap.
Yeah.
Even if you don't want some people look at it as a dirty industry, as in like not like dirty, just like food can be smelly or ruin the property. It adds a lot of value. It makes it more rentable. So
versatile,
and you can still rent it to an accountant if you'd like.
Yeah, as long as it's got the services available.
It's got the services, they can't take it away.
Yeah.
Because a lot of properties, if they do, and that's where it's to get in early with commercial as well, when you start seeing it built, because most developers think it's almost like the orphan child, they forget it. Yeah. And then they don't put the grease traps in there, and as if you've ever tried to lease a shop and it doesn't have a grease trap and exhaust, getting 18 neighbours to agree, like, we don't want the chicken shop in there or a Chinese restaurant and the exhaust going into my balcony. It's not going to happen. So little things like that can really help the mum and dad when looking to buy.
Yeah, 100%. Talking about residential properties, so say $1 million residential. Yeah. I think we were talking about Meriton Apartments. Yes. That's new. Let's talk about that and what would that buy? Yep. In that Meriton.
I'll give it 2 comparisons. Meriton, because it's almost like what you've described here is what Meriton is in DY. It's just come in there. It's a phenomenal new development, hotel style, which we've never had. Northern Beaches is it's never really had the big developer come in and just create that. So that's $1 million would get you a 2-bedder.
Yep.
And we're seeing rental returns, a 2-bedder which is about 90 square metres, so big. Well, when a similar development's like 80. So this is 20% bigger. It's still about 12 grand a metre we're seeing for the 2 bedrooms. But we're seeing rental returns of so that would be 800. That's 40 to 9. So it's about 5 to 6%. So that's huge returns for Northern Beaches because that normal $1 million would get you, say, maybe let's say a 3-bedroom red brick 1960s, which is quite typical in DY,
Yep.
that $1 million would only get you maybe $600 a week or $700. So
Similar to here.
so that's like your 3% return.
Yeah,
so Meriton,
for
your mum and dad, if you're trying to get that higher return, that's probably the closest
to
there.
commercial.
To commercial.
Yep.
But once again, you got to pay the outgoings.
Yeah. That's right. And that's where the difference is from a residential investment to commercial. Commercial, at least the tenant's paying all the outgoings.
Yes.
Your residential, you have to pay, so that becomes part of your cost. But then obviously there's tax, benefits and whatnot of that, offsets. So talking about that, so a two-bedder, $1 million, about 6% return.
Yep.
So here, a two-bedder, about 80 squares. We're talking about the Orchards. That's one of the developments here. They are selling around the 800,000. The developer is providing 5% guaranteed returns for 2 years.
Yes.
Plus rebate on the stamp duty. But if you were to go to market, a normal return on that would be around the 600, 650. 650.
Havens, they're selling around the $1 million mark. They're about 650 to 700 per week.
In terms of that, so at least it does work out to be a lot better to be able to spend that $1 million at Meriton to be able to get that better return.
Yeah, and it's pretty crazy, especially hearing like some of the pricing out here. Like I may get some of my clients when they say Northern Beach is expensive. I'm looking for the mills. You do have a lake though, you're telling me. So.
That's right. It's Bella Vista Waters.
Yes.
There's a tiny man-made lake.
Yeah, but I think it does show just Sydney-wide is. Yes, it opens up a can of worms. It's pretty affordable depending on what... There may be different areas which commercial excels here, but resi, but it sounds like from Northern Beaches where you'd think obviously by the beach would just be like through the roof for everything. It's pretty like...
It's pretty
and same as here, like you got the access to the city, the M2, which I don't think half the Northern Beaches probably know what the M2 is, but like it's...
The price point's what I'm saying. The price point is very similar. There's not much difference here.
It's just educating, going, well, maybe I'd buy resi Northern Beaches, but buy commercial or the other way around. You can still get those returns, which is great for property.
Both worlds, basically.
Especially when money's cheap. So it's just knowing where to spend it.
And having those trusted advisors work with you, whether it's buyer's agents or real estate agents, to be able to guide you through the journey. I think that's definitely a key. Relationships.
Definitely.
There you go. I think we can talk forever. Was there anything else that we had?
And in terms of the apartment market in DY, how's the vacancy rates for residential? Are there a lot of influx of apartments off the plan that are just settled at the moment?
Heaps.
Okay.
So DY is a great one because we've got 9,000 units in DY, but we've had that for 40 years. It was a lot. It was probably the only way on the Northern Beaches that got developed in like the 60s. And then we had these 3 big developments earmarked and approved, which was 635 Pitwood Road, 135 units. Then there was another corner. So if you got like the centre, so Meriton's the centre. You had our building where our office is. Then this building. Even though this won't help anyone here. But there was like 60 units here, 135, and then 87, and then Meriton 380. When you add all that up, because everyone was like oversupply, DY population went from like 22,000 to 26,000 in the last 5 years. The property price doubled, went up 50%. Like if we didn't have any more supply, it would, a one better went from like brand new one bedders were getting up to 700, 750 in peak. Like if we didn't have supply, a one bedder would be $1 million soon. But when you look at it, and that's where people get worried when they see a lot of development. Look at the area. So I would go to clients. There's 600 units here, or just under 600 units. Out of going into an area that's got 9,000, that's a drop in the ocean. Over a 3-year period, that's not really a flood of the market. So that's where you've got to look when you see a lot of especially when you see a lot of new buildings that are oversupplied, but people just can't see the 9,000. But they did sell well because you would almost you could buy a 1960s red brick for say 2-bedder, let's say entry like $650, but you're paying $750 for a 1-bedder brand new because everyone just had the same units for 40 years. All this new stock came in, they loved it, and renters like huge rental returns, 5, 6. I don't think we saw much over 6%, but coming off the old stock where it's getting 2, 3s, it was a really good uptake.
Yeah, it was upgrade as well. There you go.
Perfect. Well, thank you so much for your time. Any final words before we say goodbye?
No, thank you for having me. Otherwise, the final words will go for another 10 minutes.
Is there a comment there? Can you just check on?
Can you read it?
You can read it.
Yeah.
It's on the other way around. I think it's just a comment.
I can't read it. That's fine.
We'll come back to you. Sorry, I think you can't read that. Perfect. Well, thank you so much for joining us today.
Problem,
It's been absolutely wonderful, and do come back next week where we've got. We will have a number of other guest speakers lined up for the month of September, October, and November as well. We're just working in the pipeline for them. So definitely come back next week, 3 p.m. And we'll talk to you guys again next time. Thank you.
Thank
See
you.
you guys.
That was good.